This is Omar Nashashibi from Washington, D.C. with a three-part update on digital services taxes tariffs, the China and supply chain bill working its way through the U.S. Senate, and efforts in Congress to reopen the Section 301 tariff exclusion process. On June 2nd, the U.S. Trade Representative Katherine Tai announced the imposition and then the immediate suspension of retaliatory tariffs for digital service taxes adopted by Austria, India, Italy, Spain, Turkey, and the United Kingdom. The current USTR picked up the investigation started under the previous administration, finding that the digital service taxes imposed by those countries disproportionately affected United States businesses such as Facebook, Google, Netflix, among other online-based companies, and that's why it's referred to as the digital services taxes. In the same notice announcing the imposition of the tariffs, the USTR implemented a 180-day suspension of the action, with the end of the temporary suspension falling on November 29, 2021. This will put the countries on notice, but also provide a deadline for negotiators to reach a solution. Much of the digital service taxes discussions will also involve broader tax talks at the OECD about a corporate global minimum tax, which many expect to fall around 15% for some companies in developed nations. Examples of suspended tariffs include a 25% rate on handbags, suits, and ties from Italy, rice, quartz, and jewelry from India, footwear from Spain, carpets from Turkey, glassware from Austria, and furniture from the UK. In March, the USTR terminated the other four investigations of Brazil, the Czech Republic, the European Union, and Indonesia because those jurisdictions had not implemented the digital services taxes under consideration at that time. This means that the threat of U.S. action looms not only over Austria, India, Italy, Spain, Turkey, and the UK, but also on the EU and those other countries that may have further action taken against them if they in fact do move forward with the digital services taxes. Meanwhile, back here up on Capitol Hill, just ahead of the Memorial Day weekend, about a week ago or so, the U.S. Senate paused consideration of the U.S. Innovation and Competition Act of 2021, or the USICA bill. What started out as a 160-page bill focused on countering China's manufacturing sector and improving U.S. innovation ballooned into a 1,475-page bill by the time it hit the Senate floor on that Monday. When senators hit pause and left town for the holiday weekend, the bill had crossed over 2,000 pages with countless of amendments still waiting consideration for when they return to town. This bill is a top priority for Senate Majority Leader Chuck Schumer, who has long been one of the top China hawks here in town and in the U.S. Congress. The bipartisan legislation has now become a larger vehicle for priorities of senators from both sides of the aisle. The bill includes billions in funding to incentivize semiconductor manufacturing, increase domestic research and development. It also creates a supply chain resiliency program over the Department of Commerce, along with funding for manufacturing innovation centers, about $10 billion worth, or rather for 10 centers around the country. But once they hit the Senate floor, they added another 21 bills that covered issues from internet exchanges and NASA to shark fin sales and supporting Early Researchers Act. This expansion is what caused the bill's delay that late Thursday night ahead of Memorial Day. We were in contact with some Senate staff as late as 11:30 that Thursday night, and there was significant confusion over what was now in the bill and what some of the provisions that their bosses were voting on and that was included actually did. And one of those that is referred to here in town as the Crapo Amendment was one that did create a lot of confusion on that Thursday night. Named after the Idaho Senator Mike Crapo, for who is the top Republican on the Senate Finance Committee, the sweeping amendment not only addresses issues such as beef, intellectual property theft, and digital trade, but significantly changes the current China exclusion process landscape. When the previous administration imposed the 7.5% and the 25% tariffs on thousands of imported goods from China, the USTR created a process for U.S. importers to request an exclusion from paying the tariffs. This is a process known as exclusions, which is now closed, with only about 99 exclusions currently in effect. By the read of many here in Washington, the Crapo Amendment would call on USTR to restart that closed exclusion request portal and create greater congressional oversight. More significantly, though, as currently written, we believe the bill reinstates previously expired exclusions, effectively reinstating the ability of U.S. companies to import certain goods from China without paying the tariffs. I and others are skeptical that this language will last in the final measure that the Senate passes, but it is significant in that the Crapo Amendment is the subject of a lot of discussions on Capitol Hill and among us trade lobbyists. Effectively, what that language would do was say that those exclusions that had been granted but had expired prior to December 31st of 2020 would then be automatically extended through December 31st of 2022. Now, that seems that for those of the people that did file objections and so successfully stopped an exclusion from being extended would probably cross some issues with some due process and subject to potential lawsuits. We also don't really have a clear idea of what USTR would think. Normally, an administration, regardless of party, would not want this much of interference, certainly this late in the game, in a process that's already been up and running. So there's still a lot of back and forth over the next, not even week, but now the next 4 or 5 days. We should get a better sense of where we might end up being on that Crapo Amendment and exclusion process, because the Senate, upon its return the week of June 7th, is slated to resume consideration of that China supply chain bill, and most of us do believe that the upper chamber will pass something. We are not seeing, though, the same enthusiasm over on the House side to move such a sweeping legislation that's, again, crossing over 2,000 pages. But the Speaker does have her committee chairs working on supply chain legislation as well, so we could see a final package pass both the House and the Senate by July 4th, but they're likely going to be different, which means they'd have to reconcile those differences. We'll keep you posted and updated on the latest with tariffs and congressional action on supply chain disruptions. In the interim, please contact your CLA representative for more information on developments coming out of here in Washington, D.C.